Hello everyone, this is Scramble from Emotionless Crypto Trading. Welcome to my video. Today we're going to discuss about Ethereum's technical analysis and a few thoughts on how to understand the current market environment and all these details which are making a huge difference. Right, so first thing is the total volume in the last 24 hours, but also in the last period, which has plummeted, right? So the volume is nowhere to be found like usually. And this is creating a specific environment in people's minds. What is happening during a situation like this, especially when the technical analysis represents a possible little uptrending movement? People tend to wait for a final decision of the market. Now, the final decision comes within the technical analysis, but during this waiting time, it is exactly the situation what we have right now. Nobody's doing anything. The ones which are holding, they're not willing to sell their position at the current prices, 6,500 for BTC, 226 for Ethereum. What else? We've got a bunch of these cryptos, 57 Litecoin, Monero 111, Tron 2.5 cents dash 177, Neo $18. Nobody wants to sell anymore at these prices at the current level of the technical analysis with this volume, right? So nobody is involved from the ones which are holding in a panic selling movement, which is not happening right now, but it could happen in the future. And I'm going to explain you when this thing could be triggered and how we should protect us. On the other side, the ones looking to buy, they're not existent right now in large volumes because they're looking to see where the market is going to take off based on the technical analysis, right? So one of the things that the last 10 months succeed doing is creating a false poor confidence image of the space. The reason I'm calling it false is because during this time we were able to develop, build the right blockchain supplies, the right blockchain projects, the right blockchain environment, which means developing, improving, implementing in whatever that we put into the progress category, right? So during this 10 months of market decrease, we were developing blockchain and crypto space. That's the reason I'm calling a false image of weak confidence. People should be way more confident today than they were in December when BTC was in all-time highs. Right? So if you look at a price, then you're doing this business wrong. If you look at what is behind the company, the blockchain, and the progress, that's what you want to consider as correct, because that is what in the future is going to be reflected on the price at some point. That's how the implementation, adoption, and people investment is going to be reflected in the future as well. If we get progress, develop, and the implementation in the society, as well as the integration of this blockchain projects will have a larger scale, then the amount of money that will fly into the space will be larger, right? So the false idea of having a negative confidence level in the space is just because of the prices, but that's not where we should look at when we want to gain confidence or not, right? So confidence should be strictly related and coordinated with the progress of the blockchain. In my opinion, the prices and the trading zone is something completely different. We should not be mixed up with the confidence around the blockchain. That's my opinion. if you think like this, and if your mentality is positioned this way, you'll see how all your current problems will be lost, will be gone. You don't have problems right now because of the prices are low. And that's just due to the fact that the trading zone and the trading area always run into cycles, always is into a specific stage, right? So the current situation means we are in a stage of a cycle. That's all. It do not reflect the progresses we made in the last 10 months with the crypto space. End of the story. So false confidence is right there. And that's why there is a bunch of people which are not buying into, because there is this situation, movement, and false alarm triggered by the confidence. Poor confidence level, as they are calling it. That's right, but that's just because they're not looking at the right place from where the confidence should be gained. End of the story. Good. Going towards, right? So that's where we are. That's why poor volume, there is nothing going on, and the market is trying to go sideways, but we have some technical analysis which is providing us the data and the proof that we're not sideways, right? So what we're going to do is going to take a look at different statistics here and different charts. We've got tradingview.com, the place where you can do your own charting. We're looking at 3-hour candlesticks for Ethereum paired out with a US dollar for BitMax leverage exchange. Then we're going to have the same Ethereum with a US dollar 3-hour candlestick for Bitfinex exchange. And then we're going to have the 1-day candle for Bitfinex US dollar with Ethereum, basically. 3 technical analysis where we're going to discover different details. I don't want to keep you for too long on this video, hopefully trying to make it as straight as possible. Great, so here we are going with the first BitMax Ethereum paired up with a US dollar 3-hour candlestick. What do we see here is kind of very similar to what we're seeing on the Bitfinex exchange. Do you see these structures basically here? I'm going to call this guy structure A, structure B, the second one which is looking pretty similar, and the structure C, the current level where we are. If the result of structure C is going to be as of structure A or B, then we know what's going to happen, because the current triangle is pretty similar from the structure perspective. Details might be different in some cases, but the structure is the same, and that's what we care about when we talk about the structure of a pattern. We'll look at the structure. Good. What happens if we measure this thing? Because this is one thing that I'd like to see. If we fail to get supported in our crucial support line that we have here in the structure C, this one that is pretty much below the structure and it's supporting, it's keeping up the entire structure, is our critical support line of our trend that you can see it's slightly and slowly in a uptrend direction, exactly like it was during structure A or B. In both of the situation, it was slowly intended to be directed upwards. That's the way what is happening over here as well during the C structure. Great, so let me just take a look at the differences in the prices between the structures if the market crashed below the critical structure. Take a look at this from here, which is the bottom basically, up to this point, right? So the crash was resulting, take a look at that, 81% difference in the price during 14 days, right? So from here till the bottom, 81%. Let's take a look at the next crash basically, which is happening that way, 65%. Now, what do you think about the current stage of the market? Is it going to be funny if we go another 65 or 85 or 50% down, considering 225 for Ethereum? How do you see this reaction and thinking? How do you see this reflection for the market? Do you see we could touch those zones by filling Ethereum around $120, $140, $150? Depends how powerful this crash is going to be. If it's going to happen, if we don't get supported by the critical lines, then that's what's going to happen, right? Because the structure is very similar. Going towards, let's take a look at the, you know, this is a little bit more zoomed in, as you can see, and it's kind of the same thing, representing this specific triangles. And these specific triangles are activated in a way that the market is reacting when we break below, right? So just take a look at here. Do you think technical analysis picks nothing? Do you think that data which is provided here picks nothing? Then why is it that very powerful crash down the way after the break below? Why is it happening? That kind of speaks it all, how professional traders, how their bots are set. It's all down to the technical analysis. Even the whales, do you think a billionaire is sitting in front of a computer and he's doing the trading? No, he has people doing the trading for him, and those people are called traders. And those traders are having a mentality of a trader. The mentality of a trader is not the mentality of a gambler, right? So that lays it all. That kind of put this information in a way for you to understand that what they're doing and all these actions, even the market if it's manipulated, but that manipulation starts at a specific price point which needs to be triggered when the technical analysis says it, right? So do not expect just movements out of the gambling area and all those kind of things, because that is not happening here. Great, so you see that's what is happening. But what I'm trying to see and what I'm trying to underline during this specific chart is the very short-term events before this break below. The very short-term events could be the ones located here. We were creating lower lows. This is what we have formatted, lower lows. Lower highs as well. That's what we have created. So the little channel that we have there is directed towards a crash, right? So it kind of looks like this. And then the crash is happening. What we have right now is not a similar reaction of the data. Is not. If you take a look at the current stage, is not similar to this one. Not at all. I'm gonna let you judge and make your own decisions, and that's why we never do share predictions during our videos here on YouTube, because this is not intended as to be content directed towards to a prediction. This is content which allows you to judge and research by yourself, gives you information which helps you to judge better. That's what we're doing here. Good. So we have pointed out a few data. The information that we have, which is going very near to the breakout, is not similar. Take a look at the structure, and we're going to take a look at this. This is slightly upwards. Let's take a look at the bottom, and from what I'm able to see is we have been able to create higher lows, and that's going from here to here, from here to here, and from here to this position. We did the same during this stage, but attention, the market changed during this point here, and the change happened at $300. Again, $300 or whatever which is touching this formal prices for Ethereum, 300, 400, 200, 100, 500, 600, 700. What is touching these formal prices represents a psychology barrier for people. 300 bucks, there's something going on, because at that time we're entering in a channel which looks like this, in a little channel which looks like this, which is not permitting to establish a new higher low, which should have been here, and from this point basically we should have had the option of breaking above the resistance line. Good. That's how we put it out that way. On the other side, in this structure, which I'm going to name it B, by the way, and this is the A structure, this way is going to be a lot easier for us to name all these things, right? So this is a slightly different structure for this period right here, which is the most meaningful one, compared to this period right here, which is A1, and this is B1, right? This is where we are. This is a difference which backs up all those predictions that the space needs to have a break above the resistance line, which is this one, and that's why there is the low volume, because people are waiting for that break. They're waiting to see if we're going bullish or we're going below bearish. If they're bearish, they're not going to buy. If the line is breaking above, they'll start buying, and then the space needs to skyrocket. That's how the rational data looks like. Very simple. Let's take a look at the latest chart here. 1 day candlestick, and the purpose of this chart is to show you that we're out of the downtrending environment structure, which started early May 2018 and ended late September 2018, right? So this structure ended just a couple of, it's, you know, around 2 weeks ago. The terraces that we're in are also represented, because this is like a terracement, are also represented here as well. But what we care of this chart is clearly that we have exited of the structure starting from May down to late September, of this very powerful and aggressive downtrending structure. Good. We're out of that environment, and we're happy to see a specific movement right now. Hopefully the market is going to break above, but for that we need people supporting the space. If people don't buy in, and if others are selling more than the other group which is buying, then of course we're going to crash below. That's the most simple way to put it. That's very easy and understandable for everyone out there. So hopefully this technical analysis is helping you, because in this case Ethereum presents all the information a lot more clear than Bitcoin. In order to understand the market, you don't always have to go for BTC, and I'm assuming that if you have the skills of learning how to do technical analysis, you will find the right answers into Ethereum as well, which is something we're doing right now. We're not looking for the answers in the BTC, we're finding them and looking them in other sources, which is Ethereum, and it does shares with us all this information very accurately from the information perspective, which helps to predict the future, but it do not gives the 100% guarantee, as trading is nothing around 100%. Please understand, if you're looking for 100% guarantees from someone, or not from a person, I don't even put that in discussion. That's too funny to be considered discussing about it, right? So that's too funny. I'm gonna leave it down to the technical analysis, which is provided by the market. You cannot consider it 100% information based on a specific direction, right? So no, it might share 80% up and 20% down, but there's always these two choices, or up and down. There is no 100 to 0%, right? So there is always and always two choices of the market. That's why we don't have anything 100% here, because from the source that dictates the direction is not created to be a source of a sole direction of 100% in a specific way. No, it is always a battle. 80%, 20%, 50, 50, 20, 80, doesn't matter. There's always a possibility for both directions. What we do with a technical analysis is we're looking to find out what is a percentage for one direction and what is the other percentage for the other direction. That's what we do. And that's how we try to make a decision based on our skills and understandings, right? So that's what we're doing, guys. This is how it works in a nutshell. Hopefully you have enjoyed this video, because what I'm trying to do here on YouTube is to create a space where I'm sharing educational content for everyone. That's my first rule here. If you want to get advanced, then there is a coaching program for that, one-on-one with me, right? So this is what we can do as of right now. I'm gonna try to make more videos in the future, but what we need for that is a lot of time to prepare and to create a content, which is pretty difficult because that is a limited resource, time. And it's difficult to we're traders of our time as well. We're traders of our resources, and we have to do it in the best way, in the most rational way that we could. Great. Thank you so much for watching this video. Feel free to subscribe to my video or to my channel, and then hit the bell button next to the subscribe one after you did it, because that way YouTube is gonna let you know whenever I'm posting. And the timing you're watching my videos, what I mean by this is the quicker you watch the video after I released it, the more accurate the information is going to be. If you watch this video in 2 weeks, you're going to learn some fundamentals, some mentality things, and a lot of the helpful details. But the data that we have spoke today is not going to be accurate because it happened 2 weeks ago, right? So that's what I'm trying to say, that watching my videos at the time I'm posting will bring you the highest results that you could have from a specific content that I'm creating, because that's the way I'm creating this content, right? Great, thank you. Feel free to have activity in the comments area. Put your ideas right there in the comments and we take it towards to a discussion. On the other side, I'm working on creating the BitMax video with the leverage trading of 100x strategy, which isn't a easy video, and I have to structure it in a way for everyone to be understandable. That's why it takes a little bit of time, but we're gonna put it out and we're gonna make sure there's gonna be enough understanding of that video that's gonna be worth watching it, right? So thank you once again, and then talk to you soon.